So on this decision to keep rates on hold, let's bring in Warren Hogan, independent economist and a consultant with the small business lender Judo Bank. Warren, many thanks for your time. Markets, you could see, were surprised by the decision. It was 50-50 line ball, could have gone really either which way. But the bias is still there to raise rates. Inflation hasn't gone away.
Yeah, no, this is just a break. I mean, the Reserve Bank has done consecutive hikes, which did surprise the market and many economists. And they did note that last month was a line ball call for a hike. So I think this is really just a breather. They don't want to be relentlessly raising rates every month. I think they need, the optics of this are good, that the community gets a bit of relief. They're not in the bad news headlines again. But there's no way that we can rule out further rate hikes. I think it's becoming increasingly binary, the outlook, whether we've got a soft landing or a hard landing where we've got one or two to go, or whether there's more rate hikes next year. We're at a very uncertain moment.
Okay, so there's different parts of our community, and what's quite clear is that some parts of our community have got plenty of cash to spend. You can see it in property settlements, you can see it, the property prices are rising, you can see it in parts of airline travel, still very, very strong. Even car sales, I'm hearing from people, are still remaining very, very strong. So that sort of says that this is not affecting these rate rises, the Australian community, in an equal proportion.
Oh, it's certainly not equal. And we're hearing the horror stories and have been all year. And that's really a reflection of people overcommitting through the pandemic at the very low rates and very large mortgages as prices were going up. But for most Australians, as we're seeing in the housing market over the last few months, a 6% mortgage rate isn't getting in their way of getting into housing, whether it's a first home buyer or whether it's an upgrader, what have you. So, look, I think that actually the majority of businesses and households are doing okay.
But isn't it the problem that if they're going okay, that's not going to necessarily take away from inflation? If it's not really suppressing demand and inflation's not disappearing, then either these rates stay higher for much longer than anybody ever anticipated, or the rates ultimately have to keep going higher.
Look, I think there's no doubt that if we are near the peak, which I think the RBA would like to think, the market would like to think, i.e. another rate hike, maybe two, the rate cuts aren't coming for a year or more.
Oh, so that's important. The rate cuts aren't coming for a year or more. Because my sense is a lot of people out there in the property markets now trying to buy up stuff, or maybe jumping into the share market, whatever, are anticipating that there are rate cuts coming at some point.
No, well, they're in trouble because the risk to this view is that the RBA's got to do a lot more. You know, that this economy is resilient to these rate hikes, that the mortgage cliff doesn't tip the consumer over the edge. And of course, our rates have to go up to the level that US rates are, that New Zealand rates are. History shows that Australian rates are either at or above the international standard. At the moment, we're well below. It's historically unusual. And I think that's the real risk. And of course, that is going to be a real problem for the property market.
And you can see that right there. Cash rate 4.1%. Look, it's below every one of its other major trading partners around the world. Second part about this is also what this means is that the increases in prices, energy prices, food prices, whatever it might be, then on top of that, the higher interest rates. If that's higher for longer, the inflation rate may come down, but the prices remain elevated. So that's part of the problem that's going on in Australia.
Well, I think there's some people who want to see this sort of normalisation of the global goods/manufacturing side of the economy start to exert downward pressure on inflation. And we may start to see more and more sales in, you know, the household goods sector and department stores.
But you've seen that already in containers. You've seen it say, for example, the price of oil. So therefore, the price of petrol have come down. But it's not enough to take the inflation away.
It's not. And it's not actually the inflation that's concerning central banks. The inflation that's going to be a problem in the next 2 years is domestic inflation. It's largely labour costs. I mean, I know there's a big political debate about that. And of course, these energy costs are going only one direction as part of the transition. So the deflationary effect, potential deflationary effect of the global supply chain normalisation post-COVID, post the war, is not going to save the day here. At best, it'll just take a little bit of that upward pressure off.
So the irony of this decision today is it could well be Philip Lowe's, last decision before he discovers, which is supposed to be early July, we're kind of there now, as to who is the next Reserve Bank governor after September, whether it's him or most likely somebody else.
Well, we're hoping for an orderly transition of power here, Ross, and there are no conventions other than an orderly one. I don't think there's any lame duck arrangements either, so I think the governor will still get on with the job right up until the end of his term. But you're right, we probably will know who the new governor is before the next meeting in August.
And does that mean that the Reserve Bank currently checks itself out, or
No.
does it stay with that bias to keep raising rates?
I still think they're going to go in August. I think they're still planning to go in August. I think they're hoping that's the last one. I think there's a good chance it's the last one for this year. The question now becomes, do we have to go up above 5? And that's the story for next year.
And what's your feeling? Do we have to go above 5 very quickly?
It's looking like that.
There you go. Warren Hogan, always good to chat to you. Many thanks for your time.